If Nvidia falls, every AI company you know, OpenAI, Anthropic, Google, Meta, Amazon, Tesla, hits a hard ceiling they never planned for, and none of them can innovate past it. Not because they want to, but because almost the entire AI revolution is built on a single choke point, Nvidia's chips. And today, we're pulling back the curtain on a scenario the industry quietly fears, and why it could reshape the entire AI economy overnight. Let's start with the foundation. A Nvidia chip, like the H100, isn't just a fancy graphics card. It's a parallel math machine designed to do millions of small calculations at once. It's essentially a dense grid of compute lanes that let AI models think in parallel instead of line by line. This is what allows large models to learn patterns, language, and reasoning at scale. Right now, Nvidia controls somewhere between 80 to 95% of the high-end AI chip market. Microsoft alone is on pace to deploy over 1 million accelerators across its global data centers. OpenAI reportedly consumes tens of thousands of units per training cycle, with each new model requiring more. This isn't normal supplier dominance. It's a structural dependence where every major AI roadmap assumes Nvidia will keep scaling faster than demand. And AI today doesn't operate in a competitive hardware landscape. It runs almost entirely on the trajectory of Nvidia's next chip generation. Here's the part most people outside the compute world never fully grasp. Nvidia doesn't have to collapse to derail AI. Even a slowdown is enough. Take the pace right now. OpenAI's compute usage has been doubling roughly every 10 months. Meta is ordering over 1.3 million H100 class GPUs. Microsoft is spending tens of billions building data centers just to keep up. Amazon projects AI infrastructure spending that could surpass well into the tens of billions per year. This only works because everyone assumes the next chip, H200, B100, B200, will arrive on time and be powerful enough to unlock the next generation of models. But the reality is, if Nvidia supply tightens or performance gains flatten, AI development hits friction instantly. Training cycles that used to take weeks stretch into months. Compute budgets explode because the cost per unit of progress skyrockets. Startups get locked out of hardware entirely. Inference becomes so expensive that products need to scale back features instead of adding new ones. It's a compute race being pulled forward by one company. And if that company slows, everything behind it slows too. But the real risk isn't technical, it's geographical, and the risk might be much higher than we think. Nvidia doesn't manufacture its chips. That job belongs to TSMC, the Taiwan Semiconductor Manufacturing Company, the most advanced chip maker in the world. And TSMC sits on one of the most geopolitically fragile islands on Earth, a region where a blockade, a conflict, or even a major earthquake could halt production instantly. If that happens, every AI company relying on Nvidia's pipeline faces the same fate. Their growth engine shuts off, training schedules stall, product launches freeze, budgets implode around hardware scarcity. Remember, almost no AI company today is profitable. They survive on growth. Cut off the chips, and growth disappears. The financial side makes this even more severe. AI companies spend money today, assuming tomorrow's hardware will be cheaper and faster. It's the same logic that powered smartphones and cloud computing. Better chips make everything profitable later. But if Nvidia stumbles, that assumption vanishes. Cloud providers would freeze their multi-billion-dollar data center expansions. Investors would see the growth narrative break, and valuations would correct fast. Analysts estimate that if AI capex expectations contract even 20 to 30%, several $1 trillion in market value across hyperscalers, semiconductor firms, and AI-dependent tech stocks could evaporate in weeks. Companies built on ultra-cheap inference, AI video, generative agents, real-time assistants would suddenly face margins that don't work at scale. It's like building skyscrapers assuming steel will always get cheaper, and waking up to find steel production has been cut in half. If Nvidia falls, it's not just a market story. It reshapes the pace of breakthroughs, the economics of trillion-dollar tech companies, the survival of startups, and even the price and capability of the AI tools we all use. We think of AI as software magic, but it's really a global infrastructure project built on a foundation much thinner than most people realize. Understanding that foundation isn't about predicting disaster. It's about seeing the next shift before everyone else.